Hello everyone, I hope you all are doing well. Let's start the first chapter today of F1, the first topic, the first lecture for F1 today. If you guys remember in my orientation session, I told everyone about the ACCA Study Hub notes. We will be using those to prepare for our exam, and at the same time, we will be using a very much blend of ACCA Study Hub notes and at the same time, the Kaplan notes as well, the Kaplan study text as well. We will be using these notes to prepare for every single topic in every single chapter because these notes have been prepared in as much detail as possible while keeping all the unnecessary things out of these notes. So it is easier for all the students to memorize and keep the most important things upon their fingertips. As we can see in these notes, the definition has been written down in a way that it can be on your fingertips for everything. So the first thing we need to understand for F1 is that in F1 we are going to learn a lot of different things. There are a total of 25 chapters in Kaplan, and there are a total of 33 chapters in 33 topics in on the ACCA Study Hub, the latest material. And this is the same situation when we look towards the BPP study kit. But the thing is, we are going to learn about business, how we run a business, how we manage the employees, and at the same time, what is meant by a leader and a business. What is the difference between a business organization? How many types of organizations there are? We are going to learn many different things within all the F1 syllabus. But the first thing that you need to understand is that you need to be able to explain what is meant by an organization. Obviously, we are going to study about the organization in the whole F1, what an organization does, what rules applies to an organization, how the financial statements of an organization are prepared. At the same time, what are the important things that an organization should do? What is meant by internal control? What is an internal audit function? But before we move towards all of that, the first step is you must be able to explain what is meant by an organization. So today's first topic, we are going to talk about only what is an organization, what are the different types of an organizations and all those things. So here comes our topic number one. The notes have been prepared in such a way that you can use these notes on one side, and on the other side at the same time there is some space left for you to make your own notes. If you want to, you can write down and you can print the notes, and then you can write down anything you want to, like short notes if you want to create for yourselves. So if I move towards the topic number one, as I told you, we are going to study about what is an organization, what are the different types of an organization, and what are the features of an organization, and how each and every single organization or company in the organization is another word for business or companies, and how every single company in the whole world differs from each other. What are the main things that make companies different from each other? That is what we are going to study today. If we look towards the things that we are going to learn, first of all, in this topic, we will learn what is an organization, what are the reasons that an organization should be formed, the advantages of having a company rather than doing a business on your own, rather than having a small shop. What are the advantages of having business partners and employees and all those things? And number three, what are the features of a business organization? What are the features of an organization? What makes organizations different from each other? This is also something that we will study. And the main topic from where you can expect two MCQs at least in the paper of F1 are the two topics: what are commercial organizations and what are not-for-profit organizations. The types of commercial organizations and the types of not-for-profit organizations. We are going to study about that. What are governmental organizations? The governments that create passports for you, the governments that make your national ID cards. These are not-for-profit organizations. What are the government organizations known as? We are going to study about this as well in this chapter. So let's move towards the first topic, the very small first topic. What is an organization? Let's say, first of all, if I am doing business as one person, what is the thing that is different in me? What is the thing that makes me different from the organization? And what is the thing that makes the organization different from me? Or a company different from one person doing a business, a sole trader? What are the differences? I have no employees. I have only one goal, and I'm the only person following that goal. My goal will be to make profit and make huge revenues. That is going to be my goal. And I will be the only person following that goal. And at the same time, I'll be waking up early in the morning, working towards that goal so that I can achieve it. No one is helping me out at the same time. That is the number three thing. So this is what makes an organization different, and this comes within the definition of the organization as well. A business organization is a social arrangement, the first word, to achieve a collective goal, the second word, and through control performance. What is a business organization? A business organization is a social arrangement to achieve collective goals through controlled performance. These are the three words that should be on your fingertips for this definition. What is meant by social arrangement? Whenever you go in any company, wherever you look, if there is a company there, if there is a registered business, if there is an organization doing a business, there will be a social arrangement. A group of people will be working together. There won't be just one person working for something. There will be a group of people working together to achieve something. And all of those people will be working towards one goal. For example, if I say Nestle is an organization, Nestle is a company, an organization, they have separate employees, different employees, many different employees. They have different employees. At the same time, all of the employees are working towards one goal. The goal of Nestle is to maximize profits while maintaining quality of their products. This is the goal of Nestle, and to create a name for themselves. This is one goal of Nestle, and every single person working in the company of Nestle will have this goal. Every single person working in the company of Nestle will have this goal to achieve and to make profits for the company, to make quality products for the company, to make more customers for the company. And all of these things will achieve what? This will achieve that the company has more profits for themselves. This is the major goal, and everyone is working towards that goal. And at the same time, to achieve this goal, for example, if I am the CEO of the company, Nestle, and under me there are different employees, there are directors, and then there are managers. I will be providing recommendations and advice to my directors of how and what they should do. And this advice, the way I'm controlling my employees to achieve this goal, this is known as controlled performance. The way I control my employees so that the goals of the organization can be achieved, the long-term goals of the organization. This is known as controlled performance, that I'm guiding and I'm advising and I'm telling my employees what they have to do and how they have to do it. This is known as controlled performance. So when these three things combine, an organization comes into action. You must have a social arrangement. You can't just have one person doing a business. You need to have many different people doing a business. You need to have employees, managers, directors, or every single one of them. And this is known as a social arrangement. Everyone will come together to achieve one goal, which is known as a collective goal. And at the same time, the seniors in an organization will be guiding and advising and telling their subordinates and juniors how they have to do something, how they have to do their work, to ensure that the performance of the company is controlled and the long-term objective of any company is met. So three things that you need to have on your fingertips right now is: an organization comes into play when there is a social arrangement, when it has a collective goal, that everyone has one goal, and a controlled performance. This makes an organization, a company, a business. These three words should be on your fingertips. If we come a bit further, so let's take a look at the definitions of each of these words that we studied. What is meant by social arrangement? As I said, it is about a group of people. Collective goal says that every single person will have one goal they will be working towards. That is the long-term goal of the company itself. And then there is a controlled performance. These three things are what we studied. So the same thing is written in these three different paragraphs about the definitions of each of this. A social arrangement is a group of people with more than one person. This creates formal and informal relationships within the company. This is known as a social arrangement. A collective goal means that everyone within the organization, employees, directors, etc., will have one main goal. Kindly correct this. Will have one main goal. Every single person will be following one goal. For example, for profit-making companies, the goal is always to maximize profits, maximize their shareholders' wealth. A government hospital will have the goal to serve as many patients as possible while maintaining quality of service. So if the long term goal of a company is to make lots of profit, then every single person working in that company, whether he is a director, he's an employee, he's a junior manager, or whatever the position that person has, he will have this goal to ensure that the company makes long term profits. A government hospital will have the goal to ensure that they serve too many people, they serve a number of people, but they also maintain their quality at the same time. So all the surgeons, the doctors working at that government hospital will have this goal in their mind. So every single person will be working towards one goal, the collective goal. This is known as the collective goal. And what is meant by controlled performance? Controlled performance means that each and everything in an organization is controlled to ensure that the goal is met. Structured operations, how the organization achieves its objective, these are the examples of a controlled performance, that you are telling your subordinates how they need to do their work to achieve the goal. This telling your employees, the way you are telling your employees, the way you are controlling the performance within the company, this is known as controlled performance in an organization. So whenever someone asks you now, or an MCQs comes in the question, this they will be sure shortly, there are 90% chances that this will come in the MCQ. These notes have been prepared in such a way that these are directly linked with the MCQs. Only the necessary things have been included, those which are asked in the past exams, those which will be asked in the future. So you need to remember each and everything. What is an organization? Three things that you need to have on your hand, on your fingertips: social arrangement, collective goals, and a controlled performance. And these three things, social arrangement means that a group of people will be working together. Collective goals means all of those people will be working towards a one main goal. And at the same time, the third one, controlled performance, that all of the people working in the organization will be controlling the organization in such a way that the long term goals are met. All the performance and all the activities of the companies will be, what are the activities of any company? Inputs come in the organization, there are processes which converts the raw materials purchased into finished goods, and then those finished goods are sold to the customers. These are the activities. All of these activities will be controlled to ensure that the company's long term objectives, the goals of the companies, are met. And the definitions written below right here. So if we come further now, that was the first topic that we covered up today. The second topic that we are going to cover up is that why is an organization formed, the purpose of forming an organization. The main thing about this definition is to understand what are the advantages of forming an organization, what are the advantages to have a social arrangement, what are the advantages to have a collective goal, what are the advantages to have a controlled performance. Because we understood right now that these three things are the main differences between one person doing a business and forming an organization. So what are the advantages that you form an organization rather than doing your business yourself? The main disadvantage that one person, let's suppose if I am only doing my business alone, the problem that I'm going to face, I will be the only one managing marketing. I'll be the person managing marketing. I'll be the person managing the production. I'll be the person managing all the machines that are producing things. I'll be the person who will be managing everything else, like the purchase of raw materials, contacting the suppliers, and also contacting the customers, solving the queries of the customers. I'll be managing all of those. The number one problem that I'm going to face as one person is that I cannot manage all of these. It will be very difficult for me. So even if I'm able to manage all of these, there will be some issues regarding the capacity. I won't be able to do all the work at the same time. So there will be time taken, and one person will have low capacity. This is the first disadvantage. Another disadvantage is that, for example, if you are working in one field, then you go in another field. If you are working in the marketing, and then you are also handling the production, you are also handling the distribution, you are also contacting your suppliers, and at the same time, you are also solving the queries of your customers. You are performing every single job. Do you think you can become a specialized person if you are doing every single thing? No. In order to become a specialized person, you need to work just upon one thing for your life, and after 10 or so years you will become a specialized person. So if one person is doing every single thing, in this case, in this example, one person was doing everything, there was no organization, there was no social arrangement, there was no collective goals, and there was no controlled performance. In this case, the person is not going to become a specialized person, because he will be doing everything. He won't be able to become a specialized person. A specialized person is someone who has, you can say, capabilities and experience and knowledge in just one field, due to him working for a very long time in the same field. But this person will be working in separate departments at the same time, managing his business all alone, so he can't be become, you can say, he will not be able to become a specialized person in just one field. This is another disadvantage. Now let's work towards the advantages of an organization. The same thing that we learned here, first of all, the low capacity of one person, that becomes an advantage here if you have a if you have an organization, because in an organization there are a group of people, there is a social arrangement, as we studied, there is a collective goal, and at the same time there is also controlled performance. Because you have lots of people working together in an organization, your capacity increases. People will be able to do more things because they will focus upon what they have to do. They will be doing their work only. So the capacity of the person, the capacity of the organization is more than one person doing a business. Right here, more people, more labor to do work, more investors, more capital to be invested, large volume of tasks can be performed by an organization, because you have a social arrangement rather than one person doing the business. So you have more capacity, your size will be bigger than one person's business. Another thing, in an organization, because there are a number of people working, some people will be working in the marketing department, some will be working in the production, some will be working and contacting the suppliers. The procurement department is known as the department that contacts the suppliers, that purchases raw materials. Some departments will be directly contacting the customers, solving the queries of the customers. That department is known as the sales department. So every single person in an organization now is working in their own relevant field. And if every single person is working in their own relevant field for, let's say, 5 or 6 years, they become specialized. They have enough experience and knowledge in their own field that they become experts. And when they become experts, they become specialized. So specialization is only possible when there is a social arrangement. It is not possible if there is not a social arrangement. As everyone is doing their own specific work, this means that everyone can become a specialist in their own field of work. This would mean that specialists would perform high standard and quality of work. So specialization is the second advantage of having a business, forming an organization, because in a business, in an organization, there is social arrangement. Every single person is working towards their own specific field. They become experts and specialization happens. Another advantage of having an organization rather than doing the business yourself is synergy. Now, this concept of synergy is very simple. The word is difficult. It may be that you are hearing it for the first time, but the concept of synergy is very easy to understand. Let's talk about energy first. To understand synergy, we first must understand what is meant by energy. Energy says if you add 1 into 1, it is equal to 2. But when we talk about synergy, synergy says that if you add 1 plus 1, that becomes 3. Now, when is this possible? For example, if I was just one person running every single department of the company that I'm working in, I'm also managing the marketing, I'm also managing production, contacting the suppliers, I'm also the sales department and solving the queries of the employees. I'm doing everything. I won't have enough time to become specialized in just one field, because I will be looking at everything, right? You will learn the concept of learning curve in chapter in the subject F5 in skills exams of ACCA. What is the concept of learning curve? We will also talk about it in this F1 chapter as well, F1 subject as well. If I say that right now, it to manufacture this hairbrush, it takes me 30 minutes right now to manufacture this one hairbrush, and I'm in the production department working as a labor to manufacture this specific hairbrush. For example, if I talk about learning curve, the theory of learning curve states that when you learn how to create something, that when you have spent enough time, let's say 6 months or 1 year, you become specialized in making this one particular product. Then the learning curve happens within yourself. What is learning curve? If you were taking 30 minutes to prepare this single product, Previously, when you were new and you did not have any experience, you were not specialized, you were not an expert in manufacturing this hairbrush. And after a year, when you have learned every single aspect of how to manufacture this hairbrush, when you have learned every single aspect of how to use the machines to create this specific hairbrush, what is going to happen? The time that you take to manufacture this specific hairbrush, the time that you take to make this hairbrush, it is going to reduce. For example, I say it is going to reduce. After 1 year of work, my time has reduced to 15 minutes. Now, first in half an hour, early period, in the earlier period, in half an hour, I used to take 30 minutes to create just one brush. But now it takes me 30 minutes to create two products at the same time. This concept is known as the learning curve, or in other words, this concept is known as synergy. Synergy states that because people focus only upon their own field, because people become experts in their own field, they go through something that is known as learning curve. Their time reduces and they're able to do more work at the same time. But on the other hand, if one person was only doing every single thing, they won't become specialized. They would not have been able to do a lot of work in the same period of time after, let's say, 1 or 2 years. This concept is known as learning curve. Another way that you can understand synergy is that, for example, if I have some work that I need to give to my subordinates, my juniors, if I have one junior manager, two junior managers available, one is sitting right here and the other one is sitting in another room, I give them their individual things that they have to do. I am the manager in the company and I give them the individual tasks that they have to do. They won't be able to complete as much work if I combine them both in the same place and give them the same task. This would make them motivated. There would be friendship between them. Due to friendship, they will become motivated, and at the same time they will be able to do more work together rather than if they are alone and doing their own work. This is what the concept of synergy says, that if you combine two people and give them the same work, they would be able to do more work rather than if they were two separate individuals doing their own work. This is the concept of synergy. Or they become specialized. They take less time to manufacture the same thing, to do the same task. They would take less time. This is the concept that is known as synergy. So if we talk about it, if what is written right here, the combined output, the work performed, is greater than the sum of the work performed by each person individually. A higher quality work is performed as people become specialized. In the bracket, an example is given: energy is equal to 2 plus 2 is equal to 4, and synergy is 2 plus 2 is greater than 4. Okay. Now, the last important advantage, if you have an organization rather than you are doing business alone. For example, let's say I'm just one person doing a business and I invested 1 million pounds or $1 million in the business. What is the major risk that I have right now? For example, what if my business does not run? What if I took out a loan of $1 million as a single person from the bank, that I want to purchase a factory and I want to start my own business? The bank would give me $1 million, then I would start a business. What if the factory that I purchased, it does not do any kind of business? My business does not run. What is going to happen? All the $1 million that I took as a loan, I am the person who has to return it. I only have the risk. In On the other way, on the other hand, if you have an organization, you have a social arrangement. What does a social arrangement means? You are not the only one working, there will be employees. You are not the only one managing, there will be different managers. You are not the only one directing the organization, there will be different directors. And at the same time, you are not the only one investing, there will be different investors in the same business. You will have either partners or different shareholders. So this concept is known as reduced risk, because you have a social arrangement. The risk of loss of business is divided upon different people at the same time. If the business loses some money, the effect of losing the money, the effect of making losses, it will be divided upon all the people, those who are the investors, all the employees working in the company. The effect of losses, the effect of any risk will be simply divided upon different people working in the organization. an individual who has invested alone in a business, if the business loses some money, all the risk of the loss of the money will be upon one individual. If I have invested $1 million in a business, at the same time, if the business loses the money, all the $1 million that has been lost, all the risk of loss is with me. I have to bear the loss alone. For example, if I and on the other hand, if I have two or three different investors, if I had a social arrangement, what was going to happen? The $1 million that was lost by the business is not just my responsibility. It will be divided upon three or more investors. That is the concept of reduced risk. And this is an advantage of having an organization. A person doing a business alone will have to take on all the risk. But people working as an organization means that the risk will be shared between everyone. If a loss happens, it would affect the individual more rather than if he had a business partner. So, in short, there are four advantages of having a registered business, a registered organization, rather than doing your business alone yourself. The first advantage is high capacity. You will have more people, you will be able to do more work. The second advantage is specialization. Because every single person will be focusing upon their own work, they will become specialized, they will become experts after 3 or 4 years of work. Another advantage is synergy, that people combined together will be able to do more work rather than if they were doing their own work individually. And the final advantage is the reduced risk, because you have many different investors, you have many different employees working in the company. And if that is the case, the risk of the business is divided among different people rather than just one person. These four advantages by words: high capacity, specialization, synergy, and reduced risk, should be upon your fingertips for the purpose of exam. It can be asked in the exam. It is just a 50-50 situation. It can be asked or it won't be asked in the exam at the same time. It is not guaranteed. Let's come towards the next topic now. What are the features of a business organization? Every single organization in the world has these features. Every single organization have these. Every single organization has a stakeholder. What is a stakeholder? What is a stakeholder, first of all? A stakeholder, let's say in your home, you have your mom, you have your dad. At the same time, you have sisters, you have a brother, you may have uncles. Like, this is your family that you are living with, right? You might be living with them or you might not be living with them, but these do affect your life. If you are making a decision, if this is you, and if you make some type of decision, that decision is not only going to affect you, but at the same time, it will also affect the lives of your relatives, the close relatives. If you make a decision that you don't want to do ACC anymore and you want to pursue something else, you want to start a business, this was your decision. Primarily, this decision is going to affect your life, but at the same time, your close relatives, your mom, your dad, your brother and your sisters, they will also be affected by this decision. And how will they be affected? They will have to adjust to your new life. They will have to adjust themselves to meet your new needs, right? And at the same time, if these relatives make any kind of decision about their own life, you will also be affected by it. So in short, people who are affected by an organization, when an organization makes a decision, and the people, those who make a decision and affect the organization, they are known as stakeholders. Now, in the case of an organization, who are the stakeholders? Stakeholder, all businesses have stakeholders. Those who are affected and can affect the organization are known as stakeholder, just like your home. The first stakeholder, the type of stakeholder, is a customer. If a customer is making a decision that he does not want to buy from you anymore, you will be affected by that decision. He is not going to buy from you anymore. Your profits will be reduced. The products you sold will be reduced this time. The revenue that you generate will be reduced. So customer is a stakeholder because they do affect you by their decisions, and you do affect them by your decisions if you want to change a product. Your suppliers are your stakeholders. How are the suppliers stakeholders? Suppliers are stakeholders because they affect you if they decide that they do not want to make the product that you were buying. They want to change the raw material that you were buying before. So they do affect you by their decisions, and you can also affect them by your decisions if you decide not to buy from those suppliers again. So they are a stakeholder. The regulators, who are the regulators? The government regulation institution like the tax authority, those who create rules in a location, in an activity, in a society. These are also stakeholders of a company, of any business. The regulations in that location, the regulators in those locations are your stakeholders. The tax authority is a stakeholder. Yes, you affect them by your decisions, because when you make a decision, either that decision will increase your profits or decrease those profits. When the profits increase, you will have to submit more tax, so the tax authority is affected. When you make a decision and the profits reduce, you will now submit less tax, so the tax authority is affected. Same as the case with every single other regulator. They are also stakeholders of a business. Owners of a business, they are also affected by any decision they make. If a business is making more profits, the owner will make more profits, more dividends will be given to the owners, more payouts will be given to the owners. So an owner is also affected. Their wealth will be affected by the decisions the companies make. We will learn about the concept that a company is a separate legal entity and an owner is a separate legal entity later on this topic. First, we need to understand what is a stakeholder. And owners are a type of stakeholders, and employees at the same time are also stakeholders, because by your decision of not giving enough salaries, you do affect the employees. And if the employees go out and make a strike, then they are also affecting you by their decision of doing a strike, because at that day, in that week when the strike is happening, there won't be any profits, you won't be selling any goods, the customers will be unhappy, so you are affected by the decisions of the employees. So these are the types of stakeholders, and the number one thing that all organizations have. If it is a company, for example Nestle, Unilever, or it is a government organization, the place you go to make your, what was that, the ID card, the national ID card, these all places have stakeholders. All the organizations in the world have one these four things common in themselves. The first thing was the stakeholders. Every single organization has this feature in the world, that they have stakeholders. The second thing that all the organizations in the world have is that assets. For example, cash is my asset. Asset is anything that I control and is physical. Asset is anything that I can control and I own it. This mug that I have, this is my asset. I use it for anything that I use in the long term period. It is my asset. Anything that I use in the long term period and I have control upon it, that is my asset. Anything that I use in the long term period and I have control upon it, and at the same time I own it, that is my asset. Now, this is something that I would use in the long term period over 2 or 3 years and then replace it, right? So this is my asset. I own it. This is my asset. I control it. This is my asset. If I talk about something else, for example, let's talk about these pods, AirPods. I own them. I will be using these over the long term period. And at the same time, these are something that I will be using in the long term period as well. So this is my asset. This house that I'm sitting in, I own it, I control it, and I'll be using it for the long term period. Let's say for the next 20 years, I'll be living here. So this is my asset. Asset is anything that you own, that you control, and at the same time you will be using it for the long term period. The three things that make an asset. Your cash, you will be using it over the long term period. You own it, you control it, that is your asset. Your bank account, you own it, you use it over the long time period, and at the same time you control it, so that is your asset. Your buildings, a business's machines are used to create products that are sold to customers. Those machines are used in the long term period. The company owns it and the company controls the machines at the same time, so it is an asset. So asset are the things that you control, that you own, and at the same time that you will be using over the long term period. Business organizations may have assets to perform their operations. This includes materials, vehicles, property, and machines. Every single organization in the world has this common feature. They all have assets. All the businesses have at least one building under their name. All the businesses have materials that they sell. All the businesses have vehicles that they use to perform their business. So every single company in the world, every single organization, whether it's a government or whether it is a government organization or a private company, it will have assets. That is the number two feature common in all the businesses in the world. The number three feature that is common in all the businesses in the world is an operating environment. What is meant by an operating environment? Let's say I live in Africa and have a business there, in any region of Africa. Africa is a huge continent, and within Africa, there are a number of countries. In any country, if I have a business, if I'm doing business in a specific location, that location is going to have a particular kind of nature of doing business. For example, if I talk about India, if I'm doing business there, I have to be careful about every single thing. The government regulations, the way the government makes their policies, The political situation, that affects my business as well. The economical situation, whether the inflation in that location is high or low, that affects my business. Whether the technology in that location is high or low, that affects my business. If technology is high, I'll be using that technology to increase my business. If the technology is low, I cannot use it. It affects me. The social structure, how, what are the cultures of the people, how they buy their products, that also affects me. And at the same time, the environmental, like we all know that the world right now is moving towards green products. Every single person is moving towards having solar energy in their homes. Every single business is moving towards using green energy. People are using electric vehicles to go towards green energy. Now that specific environment is affecting the businesses of normal vehicles, because people now don't like to buy products that hurt the business, that hurt the economical, that hurt the environment of a country. They are more environmentally conscious. People are more environmentally conscious now. This affects the business because people are buying less engine based cars, rather they are buying vehicles now, electric vehicles. So this affects the business. And finally, the legal type of requirement, how many cases in the upon you there are, what are the legal structure in a country, what is the legal structure, do you get justice or not, that also affects your business. For example, what if a customer sold your products and you don't get justice about it? And what if you get justice about it? It is going to affect the way you run your business, right? So the operating environment means the way, the place in which you are doing business, how the environment of that business, how the environment of that specific country affects your business. And these are the things that affect your business. These are the things that fall in the environment of the operating environment of any organization. All business organizations operate within a business environment, which includes aspects such as the following, as we studied earlier. And this is something that is also common within all the businesses in the world. For example, if I talk about Apple is working in America. The political situation is in America will affect the Apple's business, will affect how much revenue is generated by Apple. If the inflation is really high in America, less people are going to buy their expensive products, so it affects them. The economical situation, the social way. If the people like Apple's products, that would fall under the social class. And if the people like your products, they are going to buy it. If not, they won't. So, but the trend is, and within social, there are also trends. We will study about this topic in a separate lecture. It is a full topic about this, the pestle analysis. So we are going to study about that as well. These are just the examples of the operating environment. And this is something that is common in all over the world, in every single organization. They all have an operating environment in which they operate. And the final thing all the businesses have in common is managed activities. In other words, controlled performance. In some way, every single organization in the world is trying to control their performance to achieve their objectives. The way they control their performance is known as managed activities, that they are managing their activities, controlling their performance so that they can achieve the company's overall goal, the collective goal that we studied earlier. All the business organizations have managed and controlled activities to achieve their primary purpose. These activities will have inputs, the raw materials that you purchase, and have outputs, the things that you sell to the customer, and operate within an environment. The thing that we studied here, the operating environment, all the businesses have these. They are all the businesses in the world also have controlled performance as a common thing, because every single organization, whether it is a governmental organization or a private company, whether a private company that is making lots of profit like Nestle and Unilever, and any single energy generating organization, the companies that make energy, electricity, the companies that extract oil from the earth's core, all of those have controlled performance so that they can achieve their long-term goals. And this is common within all the businesses. So what are the four things that are common in all the businesses around the world? The first thing that is common is all the businesses have stakeholders, all the businesses have assets, all the businesses around the world, sorry, not the businesses, all the organizations around the world have operating environment. And finally, all the organization in the whole world have the final thing, the controlled performance, the managed activities. All the organizations in the world have these four things in common. Okay. And this is the second topic that we studied. The first was, what is an organization? The three things that define an organization: the social arrangement, collective goals, and controlled performance. The second thing that we studied was what are the advantages of having an organization rather than one person working alone. High capacity, specialization, synergy, and the final thing that was a reduced risk, because the risk will be divided among different people. And the next thing that we studied is that what are the things that are common in all the organization, what are the features of business organizations. They all have stakeholders, they all have assets, they all have an operating environment, and finally they all have managed activities or otherwise controlled performance. This was the second topic that we have studied. Now let's come towards another topic. Let's say there are many different businesses in the whole world. There is an example of Apple, Samsung, Facebook, Meta, in other words, Tesla, Microsoft, or Coca-Cola, Pepsi. Each of the following organizations that I took the name of, these organizations are different from each other, right? Even Pepsi and Coca-Cola, they sell the same product. They sell, what do they sell? Cold drinks. But still these organizations, even the companies that sell the same nature products, they are different from each other in some way. What makes an organization different from the other organization? This is our next topic. And what are the things that make organizations different from each other? The number one thing is size. Some organizations may be big, some organizations may be small, some organizations may have 50 employees, some organizations may have 50,000 employees. Some organizations have lots of assets, some organizations may have low number of assets. Some organizations generate lots of income by selling their products, some organizations generate lower income by selling their products. Some of the organizations have a lot of investment available to invest in new ventures. Some organizations don't have a lot of investment available for their new investments. This makes an organization's size difference, that all the organizations in the world are different to each other based upon their sizes. So the size depends upon the capacity and the resources available. What are the resources? Resources are such as everything that you use to achieve your goal, that is known as a resource. Cash is your resource. That investment, cash is also an investment. Employees are your resources. You use them to increase your business, to manufacture more products and to sell more products. These are all resources. So size depends upon the number of employees, the available investment, the assets in a business, the income generated, and the number of operating locations. For example, a business is, if a business is working in Africa and at the same time they also have an office in America, they will be a big business, obviously. If a business is only working in one country in Africa or one country in the on the western side, it won't have enough business. It is not a big business then. So the first thing that makes each organization different from each other, that is the size of the organization. The organizations can be different based upon the size. Now the second thing that makes organization different from each other depends upon the ownership. Who is the owner? For example, if one person is running a business, he will be known as a sole trader, and that person will be managing every single thing, so the organization will be different. The second thing that makes the ownership different is the partnership. You may have business partners, different people running the same business. You have two or more individuals running the same business, helping each other to manage a business. And then you have private limited companies and public limited companies. These are companies. In short, these are known as companies. These are two different types of companies. Private limited companies are those companies who have different shareholders, but their shares are not listed on the stock exchange. Their shares are not traded on the stock exchange. Their shares are not traded on the stock exchange. Whereas public companies are those companies, or public limited companies are those companies whose shares are traded upon the stock exchange. They are also private companies. They have a number of shareholders. The only difference between private limited company and a public limited company is that the public limited companies shares are traded upon the stock exchange, whereas the private limited companies shares are held privately. They are not traded upon the stock exchange. Okay. And the second word, what is meant by limited? For example, if I'm a business and I have to pay $100 to someone that I borrowed money from, and if I am a registered limited company, whether if I'm a public limited company or a private limited company, but I'm a registered limited company, the common word is the limited company. What is meant by limited liability company or LLC? The limited company, the limited liability company. It means that if I have to pay $100 to someone, and if I'm the owner of that company, if I have invested my own cash in that money, if I'm the shareholder of that company, I don't have the responsibility to pay the $100, even though I am the owner. The business itself will pay the $100. The owner is not responsible to pay off any kind of liability. The owner is only limited to the amount that he invested. For example, if this owner has invested $19 in a business and the business has to pay $100, this $19 invested by the owner is something that is now owned by the business, that is owned by the company itself. You have to understand the concept that a limited liability, within a limited liability company, as owner is a separate person in that country. At the same time, the company itself, the LLC, is also treated as a separate legal entity or a separate person in the same country. Separate legal entity. We are going to study this concept later on in this same lecture. But a separate legal and an LLC, a limited liability company or a limited company, is something that is also a company when the company is being treated as a person, as a living person by the organization. What this means is that the company generates its own income, the company makes its own expenses, the company pays its own liabilities to its suppliers and gets cash from its customers. This is what is meant by an LLC, that an LLC and the owner are two separate people. The owner is not liable to pay any kind of debts that the company had, and the company is not liable to pay any kind of debts that the owner has. For example, if I'm a sole trader and doing my business, if I'm a sole trader or a partner doing business, what if I owe someone any money? What if I owe someone any kind of debt and the person asks for his money back? The owner is liable. If the owner does not pay back, he has to sell his own products. He has to sell this mug so that he has enough money to pay off the debt. But if I am sitting at home, I have invested my cash into some kind of a limited liability company, and the company has to pay someone its debt. The owner is not liable. No one can come to the home of the owner and ask for the debt. The company is liable. If the company is not able to pay, the assets of the company will be sold. The building that is owned by the company, it will be sold to pay off its debt. This means that the owner and the company are two separate people. Both can't be treated as one. The owner is not liable to pay off any debt that the company has, and the company is not liable to pay off any debt that the owner has. This concept is known as a limited liability company, and we got very much away distracted by the uh, to another topic. Our topic was what makes organization different from each other. The first thing that makes different organization from each other is the size of an organization. The second thing that makes it different is the type of ownership that it has. If it is sole trader, if it is a sole trader, it will be a different business. If it is a partnership, it will be a different business. If it is a company, a private limited company or a public limited company, in both cases it will be a different business. And cooperatives, where the owners itself are the customers, we are going to learn about this topic in later on. These are also a separate type of business. What is a cooperative? A cooperative is a business which is generated just to satisfy the needs of the owners. For example, if I live in a society and that society has different houses. Let's say this is a society that I live in, and this society has different houses and it has no roads. The society management did not construct any kind of roads. The owners of the homes will gather, they will create a cooperative. What is a cooperative? Cooperative is anything that is created to satisfy the needs of their owners. The owners, who will be the owners of this status cooperative, is also an organization. Okay, so the thing is that this cooperative, this organization will be created just for one purpose. That is, they need to satisfy the needs of the owners. What is the need of the owners? That the owners want roads constructed in their society, so they have a better living experience there. This cooperative is created only to ensure that the needs of the owners are met. All of these owners will gather. They will create a social arrangement. They will have one collective goal, that they want to create roads. This goal satisfies only the needs of the owners themselves. They don't sell products to someone else. They might, but the primary goal was to satisfy the needs of the owners. That was to construct the roads. And at the same time, the final thing, they will have controlled performance to ensure that the quality of the roads are good. All of these owners will gather, create a social arrangement. As an investor, they will pool up their cash, they will pool up their money, and the money will be used to create roads. All right. So this is a cooperative. A cooperative is generated only to satisfy the needs of their own owners. Okay, so the ownership, because of the ownership, the company can be different. The third thing which can make companies different from each other is the type of funding. For example, if I'm taking loan from the bank to run my business, it will affect my business. The way I do business will be different. And if I'm taking money from shareholders and asking them to invest in the country, invest in my business, the way I do business will be different. So the way I raise funding for my business also makes my company different from the other companies in the world, makes my organization different from other organizations in the world, how the company gets its investments such as debt and equity. The fourth thing that makes organization different from each other is the activities. The products that you sell, they make you different. For example, Nestle sells different types of products. Apple sells different types of products. Microsoft sells different types of products. So they are different from each other. The products that you sell, the services that you provide make you different from each other. Difference in departments such as production, marketing, finance, the way organization earns their revenue, what type of products that they make, do they provide services, what type of service they do provide, and at the same time, what kind of product they sell. What is a service? A service is something that you don't sell, a tangible product. For example, the person that would repair this product is not providing me a for example, a person that would repair this product is not providing me a tangible product. I can't touch it. He's providing me a service. Whereas the company who sold me this mug, it is a tangible product. And a tangible product is a product is tangible, a service is non-tangible. A service is something that a person provides on his own to satisfy the need of the customer, whereas a product, that is something that is packaged, sitting in a store, and you can go and buy it. A service is something that you cannot store. For example, if you go to a barber and cut your hair, he is providing you a service. You cannot touch that product. That is a service that he is providing you. If you go to a mechanic to get your car correct, get anything that your car does not do right, get it right, that is a service that the mechanic has provided you, because he has not provided you a product. He has not sold you a physical product that you can touch. He is providing you a service to repair your car. Okay. So activities can also make difference between different organizations. The products which are sold, the departments that are within an organization, they can make you different. Now, the final thing, the long-term goals, or in other words, that is known as strategy, that makes an organization different as well. Each organization may be different based upon their long-term goals, or in other words, it is known as strategy. What is the long-term goal of an organization and how it would get there, such as if they use the cost leadership or if they use differentiation. What is meant by cost leadership? Cost leadership means that you are selling the product at the lowest price in the market. You have the cost leadership. You are selling at the lowest price. What is meant by differentiation? Differentiation is to sell a different type of product. For example, Samsung, Oppo, Motorola, Nokia, or Apple, they all sell the same products. They all sell cell phones, but Apple sells a different kind of cell phone. Samsung sells a different kind of cell phone. Every single manufacturer of phone has adopted a differentiation strategy. Like they want to achieve higher profits through differentiation strategy. In short, what is the long-term goal of an organization and how the company wants to achieve it, how the organization wants to achieve it, this can make organizations different from each other. For example, if Apple has a long-term goal of providing quality products, whereas Samsung has the goal of making lots of profit for their shareholders, both the organizations, the way they will be doing their business will now be different. So strategy of an organization also makes differences between different organizations all over the world. And the final thing that makes different is known as culture. What is known as culture? Culture means the way the things are done in any kind of organization. The sixth thing. For example, if I talk about a government organization, what is the most probable thing that comes into your mind? Okay, I'm going to a government organization. I'm going to a passport making organization. I need a passport. Or if I need, let's say, a national ID card, what is going to happen? The thing that you need to understand is that within these organizations, the processes will be slow. It will take a lot of time to get your work done. That is the government organization. Whereas if you go into a private organization, the work will be done in a very fast way. The work will be done very, very pacely, very fast. So that is the difference in culture, the way the things are done around, the way the things are done in an organization. And each organization has their own culture, the way they do things. Every single organization has their own culture. For example, the leader's style of leadership may be different. Whether they are flexible or rigid, flexible means whether they can do different types of work, or every single person is doing their own work only and they won't do any other work. Whether they only focus on their product and not do anything else. This is known as flexibility or rigid. And whether the communications within the organization are formal or informal. For example, what is being formal, that you are only focusing upon your own work and you are not doing anything that would fall outside your scope, which means that if your job is to manufacture this mug only, then you will only manufacture this mug. You are not going to do any other work. That is known as being formal. Whereas informal means that if your job is to manufacture this mug only, you might also make this tea bag. This is known as being formal or informal. If you have direct close relation, and if you are a junior employee, the most recent person that is hired into the company, if you are a small time employee, a junior employee, and you have some type of friendship with the director of a company, that is being informal, because you cannot directly be a friend of the director. If you look in an organization, under the director there is a manager, under the manager there is a junior manager, under the junior manager there is an assistant manager, then there comes you, the employee, the most junior employee in an organization. So you only can have links with the director based upon the lines. This director is going to have a manager first. This manager is going to have a junior manager, and under this junior manager will be you. Now, if you want to talk with the director, the formal way of talking was to first talk with the junior manager. This junior manager would have talked or communicated your the thing that you asked with the manager. The manager would be the last person who would communicate it to the director. This was the formal way of doing it, right? But if you directly go to the director, you don't have the authority, but you can do it. You have friendship with the director. This is known as being informal. You're not following the way that the things are done, being formal or informal. And final, the communication methods. How do you communicate with each other? That is all, that also depends upon the culture. And finally, the traditions. What are the old way, what is the religious way of doing things? That also falls into culture. The symbols and the rituals. So all of these fall in the culture. And culture can also make an organization different. Now, this was the most difficult topic that we have studied up till now. What are the things that make organizations different from each other? The first thing was the size of the organization. That makes it different. That makes organizations different from each other. The number two thing is the ownership. Who is the owner? What is the ownership like? If it is single ownership business like a sole trader, it will be a different business. If it is a company, there will be many different shareholders. If it is a private limited company, the company will not be traded upon the stock exchange. If it is a public limited company, the shares will be traded upon the stock exchange. So the ownership can also divide different companies. And the funding, where do you get your investment? That also makes the companies different. The next thing we studied was that the activities, what type of products do you sell? It also makes your companies different. The strategy, what is your long-term goal? It also makes your company different. And the final sixth one, the culture. What is the culture in your organization? That can also make you different. We have also studied some small topics such as what is a limited liability company, what is a public limited company, what is a limited liability company. We also studied those, right? Here. Yes, right here. And I also gave you an example of what is meant by a limited liability company, whether it is a separate legal entity or not. We also studied about that. So these are the 6 things that make organizations different from each other. You can expect anywhere from 1 or 2 MCQs from this specific topic. I think it would be a maximum of 1 MCQ within the F1 exam for this topic. Okay. So let's end today's topic right here, and we will continue with the rest of the topic in the next lecture and complete it in the next lecture. We can't complete it all in one go because this was the basic understanding. It took a lot of time. After this, there is no basic understanding. There are not new things. It is just that all things that we have also already studied. What is a profit making company? What is a not profit making company? What makes an organization different from each other? We are going to study about that. So up till this, make sure that you study this topic, what we have studied. If you have any questions regarding that, do not hesitate to ask in the WhatsApp group. To ask it. And if you have any questions from me, you can ask them as well. Up till then, take care, but do prepare it. And after we end this topic, we are going to go towards the MCQs and the MTQs and the ACCA study hub questions as well. Okay, so take care, and I'll see you guys in the next lecture. Have a nice day. Bye bye.